Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today we're going to talk about something very strange that happened on Friday, June 21st, 11:32:21 Eastern Time to be precise. And we're going to talk about what this might have been all about and what it means for the future of investing in resource juniors.
Well, I did. The TSX Venture Exchange volume on Friday nearly doubled to nearly over 200 million shares.
You know, typical volume for the venture exchange is around 90 million to 110 million, and about 60 to 75% of that is from resource listings, and I track these numbers. And most people didn't notice that on Friday was such a high volume day. Gold was down, maybe $20 or so that's not such a big deal. And in fact, even talking this week, most people have no idea that something special took place. And in fact, when I was processing the data Friday night, the file that the TSX Venture usually posts that has all the volume and the traded value and the gainers and losers and unchanged issues and the new highs and new lows, they did not file that until Saturday morning. So when I found the file in the morning and looked at the numbers, I just about fell off my chair. And so I have a system in Kaiser Research where every day I tabulate the volume and value leaders and top 100 and the gainers in terms of percentage and absolute terms for all of the exchanges, TSX, TSX Venture, CSE, and ASX. And when something unusual like a volume spike to 208 million for the venture exchange, of which 155 million shares were for resource listings, I look at this to see what caused it. Usually it's some takeover bid that has been announced and all the algos are trading this stock, or a bankruptcy has been declared and the stock has crashed and everybody is unwinding their positions, or sometimes there is significant news that signals, wow, barn burner discovery, this changes everything, this is a game changer. So then you get these stocks sticking out, trading huge volume. But when I looked at it, I was disappointed to discover that the top trader was Pure Point Uranium with 2.352 million shares trading, and then it got lower from that. And I said, what is going on here? Where's all this volume coming from? So I took a look at the Pure Point trading. Did a trade recall. Stockwatch has this fantastic feature called Trade Station that allows you to do house summaries for any day or range of days, but you can also, for a specific day, retrieve all the trades. And Stockwatch tags them as to whether they were done through the TSX Venture or through these various alternative trading systems, of which there's about 10 or so. And so when I did this, I said, oh, this is interesting. So my data is only what has gone through the TSX Venture Exchange itself, where Stockwatch had the data for all the alternative trading platforms. And that totaled almost 3.6 million shares, basically trading between 2.5 cents and 3 cents. And the total value of everything that traded, was only about $60,970, and I did walk through the trade recall, and everything was kind of uninteresting until all of a sudden at 11:32:21 Eastern Time, Anonymous starts selling. And in this case, it's sort of selling at 2.5 at 3 cents, and there's a whole bunch of small trades, 1,000-share trades, and the other side is very frequently often National Bank, and it's just back and forth. And all of them are time-stamped with the same second. So there's this whole flurry of trades, and the whole thing unfolds in about 9 seconds. It's done, and then it's over. And I was wondering, well, what was this all about? This is strange. I guess somebody got fed up with this company and dumped a large position. But then I started looking at the other companies, and the next three leaders, Osino, Atha Energy, Power Nickel, they all traded between $1 and $4 million worth of stock, not some, $65,000 worth of stock. And I looked at their trade history or trading for the day, and it was like normal. It was the standard mix of stuff. And then I got to Sable Resources and several others, and then I said, oh, wow, they all start trading after being quiet most of the day. They start trading at 11:32:21. And said, this is very strange, and it's all anonymous. It all takes place in about 10 seconds, and then there's sort of a little bit of volume afterwards as anonymous, which is often the other side of the buy, too, is busy feeding whatever they bought back into the market. So I went through the top 30 and discovered that half of them, 15 of them, were of this peculiar nature. And then I started hearing that other stocks, such as Solitario Resources and Endurance, which are part of my bottom fish and favorite collection, they had also had unusual selling activity. In the case of Solitario, it trades TSX, and so we checked that and said, oh, yeah, 11:32. Not a big amount sold, but some was sold. And in the case of Endurance Gold, there was actually a fair bit sold, but it wasn't like the stock made it into the top 100 volume leaders. But the stock traded all the way down to 10 cents. And I began to wonder, how widespread was this phenomenon? And so today, I used my Kaiser research search engine to display all the TSX venture resource listings, and because I have a long-term and a short-term chart, I can see, look for like tiny volume spike in the past few days or a dangling price bar where the stock got knocked down by a market-type order which filled almost everything that was available and then liquidated the rest of it at whatever was the lowest bid. And I walked through and looked and used my intuition to put in the symbol into the Stockwatch trade station, and in 95% of the cases, lo and behold, around 11:32:21, there is anonymous selling these shares. And I managed to count 162 such companies. I mean, that's incredible. So for no human being could have teed up this type of transaction and just pushed it into the system. This was clearly an algorithmic program which had been queued up in advance to unleash these positions to over 160 companies, and I didn't bother with checking the CSE listings or the TSX listings, so it was probably a portfolio of 200 companies with positions in the millions to like small positions, 40, 50,000 shares. In fact, there was one Trailbreaker Resources, which was a bottom fish, generally illiquid in the 40, 50 cent range. It managed to, you could see the tail of the, dropping down to 33 cents during that day. It closed at 46 cents the day before, and then it spiked down to 33 cents. And by the end of the day, it was back up, closed at 43.5 cents and down only 2.5 cents on the day. But this had happened across the board, but hardly anybody noticed because, they're looking at their stocks and say, oh, some jerk just pounded out some stock on my, in my company. And they weren't aware how widespread this event was. And I find it troubling that nobody's talking about it at all. This had to be an algorithm. And interestingly, much of the initial trades were pumped through the alternative trading systems. So that means this computer was plugged directly into the execution system, and when they hit the start button, it just started unloading all these trades, 160 plus different positions, all executed within 10 seconds, and puffing the volume up to 200 million plus shares. And on Monday, everything was back to normal, as if nothing had happened. And I'm very curious to find out who, why, or what this was all about, and also what it tells us about the nature of the trading that's supposed to be, serving price discovery purposes and enabling companies to raise money, and when they do get good results, end up with a higher higher price that they can finance with.
Do you think this was a fund liquidating a portfolio, such as a flow-through fund?
Well, that was my original thought on Saturday when my subscribers and I were on our Slack channel, sort of trying to sort out what this was all about. But then as I went through those top 30 traders and found the 15 that had the same pattern, I realized, some of these companies, their flagship projects are elsewhere. They are not in Canada. So definitely not a flow-through fund. And yes, a flow-through fund, they don't care about any of these companies. The whole thing is a tax deferral mechanism. So yeah, they are quite capable of blowing out those positions. And last year when we, we're hoping lithium mania just might, come to life again after the forest fires went out in the James Bay region, a lot of the juniors were just crucified in the market because these flow-through funds have these redemption dates, and they were just pounding this out. But when they do this, they do it here and there. They don't tee it all up in one shot. This was very, very strange. I also don't think it was an institutional fund that specializes in resource sector companies, because I looked at this group of companies, and some of them are liquid stocks, like there's Red Lake Gold's a Frank Justra's company, which is liquid. It's got the real story. It's reviving the gold mine there in the Red Lake area. And there's also a number of my sort of bottom fish and favorites in there that I think are decent companies. But a lot of the stuff is very obscure and has been a dog forever. And why would a portfolio manager assemble these 2-3 cent stocks that are basically dead companies with a negative working capital and all that? I'm more inclined to believe that this was a human entity, an individual whose portfolio was liquidated in one shot, rather than a professionally managed portfolio, because there's no rhyme or reason to the mix of companies that were blown out at 11:32:21 Eastern Time on Friday.
Could this liquidation event have something to do with the capital gains tax change in Canada?
That, I think, is the primary suspect right now for what I think has happened. Now, on June 25th, which is Monday, the regime changes. Now, for ordinary retail investors, it doesn't really matter much. The change is that before the change, 50% of whatever capital gains you make in Canada gets added to your margin, to your income, and taxed at your marginal rate, which is progressive, which means that, the more money you make, the higher the tax on that incremental extra income. But the new rule is that for individuals, only the first $250,000 of capital gains will be taxed at 50%. Anything above will be taxed at 67%, not at 67% of the gain, but 67% of the amount capital gain above that gets added to your income. And if your marginal rate is 40%, 50%, you'll lose that. You'll lose that in taxes. However, it's a different situation for trusts, and there's two kinds of trusts in Canada that are popular. There's the alter ego trust and the joint partner trust, and these don't save you from paying taxes or anything like that. They're really more an estate planning tool. In the case of an alter ego trust, the individual to whom it belongs is the primary beneficiary, but that individual can designate beneficiaries to whom the assets pass once that person dies. And this is a way of having these assets move right away and not have to go through lengthy probate and all those expenses. And the joint partner is where both spouses are there, and then when one spouse passes away, then the other spouse automatically gets it, and then of course it turns into an alter ego type of trust. Now, the problem is under the new rules, all of it will be taxed at the 67%. There is no first $250,000. So if you're a wealthy person who's put all these assets, financial assets, into an alter ego trust, this shifting from 50% of it to be added to your marginal, to your income to be taxed at the marginal rate, going to 67% is a big deal. So I suspect that somebody who had over his or her lifetime accumulated this monster garbage portfolio that make no sense or rhyme or reason, but had this was their play money. They probably had other assets. And Friday was a big day for the TSX, for the real company stocks, because people were selling stocks that were in the money so that the gains would be taxed at the 50% of the gains would be added to your income to be taxed at the marginal rate. And then they were looking at all this other junk and saying, these things are all losers, they're all losses, so let's reduce the taxes we're going to pay on our winners by dumping these things and using the losses to offset the gains so that we don't have to pay so much tax even under the old regime. And there's an alternative explanation for this also, is that this was actually an estate sale. Somebody had passed away and the executor was basically liquidating the entire portfolio. But yes, it's the mix of the portfolio, it's like some lifetime garbage can of stuff that you have in your attic, and it finally got dumped into the market. There was some more recent good stuff in it, but there was old junky stuff in it. So that is my suspicion, that it was something like that.
Do you think this trading could have been caused by an out-of-control rogue algo program?
Well, on Saturday, social media had picked up on this, and some people were posting on Twitter that this apparently was an algo that was out of control. And we've heard of these fat finger events where somebody pushes the wrong key and sends a cascade of orders into a stock, and it just kills it right down. And the flash crash that happened about 10 years ago was something similar, though it was actually triggered by a deliberate event by somebody else who didn't quite know what they were doing, but it ended up triggering all these stop loss orders when the prices started going through these levels. Then all of a sudden these orders to sell came in and made the whole thing worse. But if this had been some accident or even a rogue program that went out of control, all of it took place in 10 seconds. The stock exchange would have canceled the trades and just unwound everything, because in this case, these positions would be short. You can't be short millions of shares of some 2-cent stock. None of these things are in margin accounts. You can't borrow this stock. This stock is unavailable for borrowing. So we would have seen either the trades canceled if it was an accident, or all kinds of mayhem on Monday as this entity that accidentally sold all these positions short and was in the market scrambling to buy them back and make everything whole. That did not happen. Monday was a very subdued day. Tuesday was a very subdued day. So this was not a rogue system that went out of control. I think this was an algo system that was teed up to pump all these orders simultaneously into the market without alerting all the other algo traders out there that, hey, here's a whale whose giant portfolio is being liquidated. Let's stand out of the way and make sure they get as little as possible. It was dispersed, 160 to 200 positions simultaneously unleashed in the market. All these other algo traders are watching these markets and saying, oh, here's an opportunity to buy something. If they could have sensed that this was happening on a very large scale, they would have backed off, and the party that was selling this position would have got a lot less. But what I find very troubling is that this scale of an event can be done through the venture exchange. The venture exchange is supposed to be about human beings visualizing the potential outcome, doing their risk-reward assessment of what is the potential that this target will deliver a world-class discovery, and the market's supposed to serve as a price discovery mechanism. And it's interesting that Power Nickel was there in the top of the list. That's Terry Lynch's company, and it's been doing quite well lately. And he's been the head of Save Canadian Mining Committee, which has been very concerned about the short selling on a downtick done by these algo traders. And yes, this is a huge problem that we have. Is somebody like Hercules puts out some good news, retail buying comes in, stock starts going up, the algos sniff it out right away. They just start selling non-existent stock, into the bids. And eventually the buying fizzles, and then they just keep selling. And they fill the bids because they can lean into the bid side of the book and just sell on a downtick short. And the reason they can do this, because all they have to do is intend to borrow. But the way this market is, then all the longs end up despairing, and you get a cascade of selling of long positions, which enables these algo traders to cover their short position that very same day and not have to try and figure out how to borrow stock so that it can be delivered. And settlement is next day settlement. It's no longer 2-day settlement. So this kind of nonsense of dragging a short position over multiple days, it's not really possible. But the system is set up with this mechanized trading to literally strip incoming risk capital out of the market and pocket it in for whoever it is that these banks make these trading facilities available. And these alternative trading systems, they were allowed so that the stock exchange would, not be accused of having a monopoly. But these alternative trading systems serve no purpose other than to manipulate the market and screw the individual investors and violate the principle of first in, first out, first come, first serve. If you're in the order book and a order comes in, you should be able to get that first because you're there. But because of these different rules, the brokerage firms have developed their own algorithms for a client order, and they sniff out which of these different alternative trading systems create more profits for them. So if you're sitting in the ordinary venture exchange and with a nice stink bid and an order comes in from somewhere else, it'll be shuffled through one of these other trading system channels and you'll get nothing. It's not supposed to trade lower than your price, but you can have been there for weeks with an open order and you can get nothing. The whole system is rigged to destroy the confidence of retail investors in the resource junior sector as a price discovery mechanism. And it's no wonder that the whole system looks like the whole Canadian resource ecosystem is going to be dead by the end of the decade unless something is done about this travesty.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.